Hey there, and welcome back. Today, let's dive into why investing in AMD, Google, and Amazon stocks in 2026 could be a smart move for your portfolio. First off, AMD is at the forefront of innovation in the semiconductor industry, with a growing demand for high-performance computing and gaming. As technology continues to evolve, AMD is well-positioned to capture significant market share.
Here's a crisp, fact-checked snapshot of AMD, Alphabet, Google, and Amazon, their most recent financials and guidance, why 2026 could be attractive, what makes each special, and the key risks to watch. AMD. Latest results Q2 FY to 025. Revenue $7.69 billion. Company emphasized record server and PC processor sales. Guidance for Q3 FY to 025. AMD guides revenue $8.7 billion plus or minus $0.3 billion approximately equals *** plus 28% U** plus 13% Coke and non-GAAP gross margin approximately 54%. Guidance excludes any MI308 China revenue pending U.S. license review. Why 2026 could be interesting. AI accelerators ramp. Management is well positioned to deliver significant growth in the second half of the year, driven by Instinct MI350 ramp and EPYC share gains setting the base into 2026. Data center capex tailwind. Hyperscaler AI spend is projected to keep climbing into 2026, supporting demand for GPUs or CPUs. What makes AMD special? A fast product cadence EPYC CPUs, Instinct accelerators, Ryzen, strong foundry ecosystem leverage, and exposure to the AI compute cycle without the platform risk of add cycles. Key risks: competitive pressure. NVIDIA, Intel, export controls, notably China on accelerators explicitly flagged in guidance, and supply chain, foundry constraints. Alphabet, Google, Nasdaq. GOG, Google. Latest results Q to 2025. Revenue $96.4 billion plus 14% YoY with double-digit growth across search, YouTube, subscriptions, devices, and cloud. Google services operating income $33.1 billion, margin approximately 40%. 2025 to 26 spending outlook guidance like Alphabet raised 2025 capex guide by $10 billion to $85 billion for AI data center build. CFO said capex expected to increase further in 2026. Alphabet doesn't give revenue guidance. Why 2026 could be interesting. AI at scale. Heavy investment in AI infra TPUs, data centers aims to reinforce moats in search, YouTube, and cloud through 2026. Multi-engine monetization. Ads remain robust, subscriptions, YouTube Premium, TV, Pixel, and cloud ad diversification. What makes Alphabet special? Unmatched distribution search. Android, YouTube, proprietary AI silicon TPU, and enormous data advantages plus operating leverage and services. Key risks: ad cycle sensitivity, AI-driven search behavior changes, regulatory scrutiny, and elevated capex depressing near-term FCF if macro yields stay high. Amazon, Nasdaq. AMZN. Latest results Q to 2025. Net sales $167.7 billion plus 13% YoY. AWS plus 17.5% YoY. Operating income $19.2 billion. Guidance Q3 2025. Net sales $179.5 billion plus 10 to 13% YoY. Operating income $15.50, $20.5 billion. Why 2026 could be interesting. Oz Acceleration plus Genai, re-acceleration in cloud workloads and Genai services drives retail profitability flywheel, faster delivery, ads, and 3P seller services keep expanding margins at scale. Risks, macro-sensitive consumer spend, cloud price competition, and continued capex for data centers rate-sensitive financing environment. So, should you buy in 2026? If your thesis is AI infrastructure demand remains strong and you want diversified exposure across the stack, a basket of AMD compute hardware, Alphabet AI-enhanced platforms and cloud, and Amazon Cloud Plus Ads Plus Commerce can make sense. Near term, their own guidance signals continued growth into late 2025, positioning them for 2026 if macro conditions, rates, power build-outs don't undercut capex returns. Quick valuation context today, GOOG market cap approximately equals to $13 T, PG approximately 18 AMD. AMZN trade more on growth, FCF trajectory than simple earnings multiples, use ADCF growth framework. Bottom line one-liners. AMD, cleaner, high beta AI compute play with CPU, GPU share gains, watch export, licensing risk. Alphabet, profitable AI platform with rising capex through 2026 to defend, expand moats across search, YouTube, cloud. Amazon, multi-engine profit machine, Oz plus ads plus logistics scale into 2026 supported by steady top-line guide. If you'd like, I can build a side-by-side model revenue, EPS DevCF scenarios through 2028 with key sensitivities like capex, yields, and AI infra adoption. Not investment advice, for education only.